Good morning, everyone. So we got green on the minders. Market's up here a bit. Dow up over 200. And it means, I think, about zero, which is, you think interesting that you see green values here. Market's up, Dow up 200 points, S&P's up 32 points. And we look at the chart and nada. So one of the takeaways here is that ranges have gotten pretty big, and that values of being up a couple of hundred points really don't mean a whole heck of a lot. You have to put it in the context of price patterns, as we always do. And yesterday was a bit of a weird day, let's just say the least, with a little candle body there with the open and close in a pretty little tight range, and this move back up and back down and back up, and crazy. But markets have been kind of crazy, and prices are close to an area of price support. So traders, institutions are going to be a little apprehensive about continuing to sell. A little bit of hope mode occurs in a situation like this as to those that were buying up here, where the warning signs were beginning to emerge. And then we know what happened. And we got the retest and the down here. And so now it's like, will it bounce? Well, there's an area to the left. Will it bounce? And so we got these gyrations here. We still have the uncertainty of whatever degree Russia, next month, Fed interest rate increase and what that's going to do and so on. So we're kind of like in the middle of nowhere. And I think pretty much in that, other than what I've already said, but we have no pattern to trade on at this point, unless you just want to, say, hey, I'm going to buy here and put a stop down here and see what happens if it begins to bounce. It doesn't make sense to be shorting near support. So this level of uncertainty about which way prices are going to go. As always, we look for some pattern, some bar, right, within the context of the pattern. So when we know it's at support, my ideal scenario was, as already explained in prior videos, was for it to either gap down or travel down and get some kind of a big green bar. So big bars display emotion. And on a big gap down day, you've got that fear, belief that prices are going to go down. A lot of times it takes out a low. Then we get a big bar, big rally day. And then we see whether it's an inside day, whatever it's going to do. But at that situation, at least we have a solid bias that buyers have taken control in an area that it makes sense. And now let's see how it can progress into an area of resistance. We don't have any of that. And what we have right now is, a big move that occurred and then it failed. And now, right now, just running in place, even though the numbers are positive, essentially prices are going nowhere. All right. Let's take a look at SPY and we can get to SPX. So let's just call it 370, 433. Go to 433. In the middle of the range, up a little bit, getting closer to the top of the range there, but it was higher, but basically the same, going nowhere. You can see the crosshairs moving across the hourly chart. So we say, where would it open? Would it make a difference? No. It's in a downtrend. It's in a downtrend. Prior swing high is up here. This will become a pivot, assuming it can close another hourly bar over here. So we'll have established some support on the hourly time frame. Momentum slowing a bit. You can see this strong momentum, very strong here, strong. And assuming this becomes a pivot, the distance between the pivots is a little closer. So some slowing momentum. We still have this hourly sell setup, which ideally takes out the low. And we get some kind of a bounce. Going nowhere. Now, SPX. Gotten a little tighter. Which, like, are these within striking distance? Where are the lines of defense that we speak about as to what would stop prices from going to a level? And we really don't have anything down below. It's just a far distance. So you can go down to 42.10, right, which is down here. But if today got nasty, well, it would be a long way to travel, but it could happen on a big nasty day. It probably would be more likely to happen if we were, starting a day that was down here rather than an inside day. And it's I would say a little bit out of my own personal no-brainer level of where things could potentially, I would say they won't go. I think they could go if things got nasty, but the way things are trading here, as already explained on the futures and spiders, I think it's a reasonable assessment that it will not go down there today. Right? 42.10 evaporated. Let me see here. I'll go back to SPX on these other charts. 10. Yeah, 35 by 45 now. Well, 42.15 or 42.20. Well, you want to go to 25. Yeah, that's getting a little more juicy. Well, it's down near that pivot. It should be okay. Like I said, could it go down there if things got ugly? Yes, it could. It's reasonable to think you could get a bar that could go down there. Absolutely. But last I looked, 44.20 was 60 cents by 70 cents now. You go 44.25, which I don't think it'll go up there. It's in the middle of that wide range bar. There's no moving averages. You can see the crosshairs. Well, there's a little swing there, maybe on a 5-minute chart. Well, you can see it right there, right? That little rounding area there, and you have to get through those pivots. So 44.25. And Ali, I wouldn't say anything is a no-brainer, but since I don't think the downside is done. I don't, until we get some kind of a bar that's more meaningful or a move down there, I don't see the reason why prices could retrace that far up there today. So 44.25, 40 cents by 50 cents, 44.20, 60 cents by 75 cents. You choose. But I kind of like that idea. Because I think, look, in my opinion, I think ultimately prices need to go down and test this level or go down below it. What's going to trigger it? Who knows? Who knows as far as what could come out in the middle of the day? Things kind of just whipping back and forth lately. So, all right, Qs. They're already down through the January low, and we got a bottoming tail bar. So if I had my wishes for today, no one likes a boring day, but I think a boring day would be very constructive as far as the potential for making some type of a bounce here, where we'd have a couple of days of consolidation. So where if prices were to potentially just, chop back and forth, somewhere between these areas here. And so as prices would go sideways and begin to build a base over time, and in retrospect, in 2020, we would look at this and we talk about a downside shakeout and bullish price action at an area of resistance, which is, the beginnings of what's happening. It's early in the day, of course. But if we could get that over the course of a day and that sideways consolidation over time, that could open up the door to, some type of a move toward resistance. Nothing of, looking for any kind of a big move yet, because we just don't have that scenario. And yesterday did little, right, to get our internals lined up. So no help there. The Russell is down on some support, inside days, similar patterns like we've been seeing each morning. When do you choose an iron condor or bear call or put? Well, as the markets are going down, Ali, like yesterday was a no-brainer, right? There was juice down close to 4,200. And, as the markets go down the day before, or they're down early in the morning, the premiums tend to explode and you can get so far away. And I just look at, it's very, very simple. I just look at average true ranges, just eyeballing it. I don't need an indicator to measure it and say, what, a few things, average ranges. I look at what preceded it. So this is an igniting wide range bar. So if you said, hey, do you want to do a put spread, down here after an igniting bar, I would say, hell no. And I'd be thinking more, since it's this consolidation here, a call spread up above here. Whereas what we have here today going on, just explaining it from this point of view chart, just going back to SPX anyway, and the inside day that's occurring and saying going down here and up there, today, and, where things are. And, if you were to look at this, like, I suppose if you got into bell curves and market profile and all of that stuff, and, just saying, well, if this is the point of control, which just eyeballing this, it probably wouldn't come up as a point of control. It would probably be somewhere up here. It's always based on price. But in any event, if we were to say this is basically where we see stabilization, which we do, and then we went above and below that area, and my commentary about potentially staying in a trading range today could be an iron condor kind of a day. So, keep that in mind. We can revisit it tomorrow if you remind me. I probably forget about this conversation by tomorrow morning. But let's look at Friday SPX. Well, Friday SPX, I don't know what pattern will be produced by Friday, but that is the 25th. And so Friday SPX. Why aren't these prices filling in? Something up with TC here. I don't see the prices. They're not filling in here. Oh, something happened here. Well, the prices went away. 41.25 for Friday. Unless the bombs start to fall, I say no brainer. Something to scare the crap out of the markets, because 4,200 is going to be a big level. It would be taken out this low, and that would be a comfortable distance from where I would say is the area that the markets would turn. So if for any reason today is not a consolidation day and it heads down, you know, uh, which is exactly what I would want to see, is it coming somewhere into this little green band here, give or take, and then we get another counter trend move. All right, let me continue. My Q's already covered the Dow. It's down here. So when I say I'd like to see it take out below, like we always look at patterns and it's like, oh, I would like that particular pattern to show up. I would like that particular candle to going to happen, right? I see plenty of times where I've such and such, and buyers, for whatever reason, at a certain point in time in the markets or environment, are more aggressive as buyers, and they step up early. And so institutions, they can't get in on a dime and say, okay, as it gets down there, and then it stabilizes, and then it takes out a prior bars high, as we can trigger our buy setup. They don't do that, right? Because they want to get in and they have, massive amount of money. So they sit there on the bid and say, that's the area. And they'll accumulate. And that's what creates downside shakeouts. And then as the shakeout occurs, and then it becomes more and more evident that they can't buy on the pullbacks, they then have to decide to become more aggressive and take the offer. And that's just how prices progress. So just if we would go back and analyze this day to day and these whips going back and forth, and then as it started to move up, you would see, they're buying the dip, and then all of a sudden it starts trending higher, or vice versa, it starts trending lower. So right now, for the moment, we've just, neutral. We had it tried to go up, went back down. It's in the middle of nowhere here. Back to the conversation. Q's put spread for Friday. That's a little more tricky. There's nothing under here. Looking at the weekly chart, if you said pick something, me, I'm going to pick something which most would consider ridiculous, but I would say down at 320. But you're not going to have any premium down there unless it decisively takes out this low and gets down to 330. So I don't know. There's no support. There's no moving averages. You can see there's a void here. So, and ultimately, look, that's where I would hope it does go down to. I doubt it's going to happen by Friday. Let me continue. It's getting a little late here. All right. Bitcoin stabilizing here. It's on support. All right. Look to the left. Blah, blah, blah. Oil. Whipsaw stabilizing for the moment. First red bar on the weekly. I would suggest staying away. Still in a bullish trend though. Transports. And that broke down. So overall bullish theme is still intact. Maybe a neutral day today. And, in the day, don't get chopped up as always, but greater potential to get chopped up with what I'm seeing for the moment. Interest rates perking a little bit here. So really, no matter where you look around the markets, interest rates, Bitcoin, equities, silver, stalled inside day, gold, inside day, nothing happening there. Euro, nothing happening there. Everybody's waiting for something to happen. All yours, Dan.
Good morning. All righty. Yeah, so Greg, I'm listening to everything you say, and it's kind of related to what I texted you last night about, human nature. We see big up numbers and we're like, all right, it's not perfect. Okay, so are we going to watch, the spiders go up $20 points until we say, oh, okay, now we got a bullish bias? You know what I'm saying? So, I know the hourlies are still in downtrends, but remember we talked about a more aggressive plan B, which is off the hourly. So, just something to keep an eye on. Because I surely don't want to miss a big move if this is the turn. I don't know. Like I was talking.
And buy a dip and give it a big stop. What else can you do other than trade the chart?
No. We are going to trade the chart, but it's what I'm saying. The plan B would be the hourly is more aggressive. That's by definition going to get us in quicker. So yesterday on this 5-minute reversal, I was tightening stops, and so on the shorts, obviously. So we had excellent profit taking on. We did half of IWM, half of Netflix. We had bearish directionals, a couple other open short directionals we had. I don't have a single alarm going off today. So even with the gap up, the back half of all our shorts are still fine. So let's go right to, oh, actually I see our little RES core trade up 40 cents. Because it's showing a print up here at 837. Yeah, we're core long this. Look at this thing. That was a beautiful execution of multiple time frames for a core trade. And in fact, that's going to be the trade review of the week. You should see coming out anytime now. So let's go to gappers here. Intel, it's not a compelling gap. It got an upgrade, and some short guy on CNBC called it a screaming buy, and that must be based on fundamental view because there's no great technical view there. But I did notice semis and banks are getting a nice little intraday gap here, as many things are. The Dow 30, there's not a single red in it. FANG stocks are up across the board. Let's open the Qs. Microsoft, Apple, they're all up. Dunking, this was one we were just talking about yesterday afternoon as a scalp on that reversal on the spiders I talked to you about. This is a big old inverse head and shoulders. Still looks higher. Here, look at Home Depot. This is a climactic buy. Greg, this is your style right here. I know Greg doesn't like buying initial climactic buy setups unless you get something more, retest, so on and so forth. This is a double bottom new low plus. Then it closed above this resistance. Now it's gapping up and going sideways. If the market weren't gapping up so much, 5, 10, 15, 30-minute high, I don't know. But that looks like a great day trade on Home Depot. And that's also another good example of, even though this is a nasty wide range bar, you see the void on the intraday time frame. LOW, competitor. I'm actually surprised it's up this much, just kind of based on the cockroach theory and the charts. I expected this to be down, but it's bucking the trend, no pattern though. TEN, wow, big old gap. That kind of looks like a buyout. A couple of stocks here getting whacked that I put on I didn't give you all my list here. Particularly in earnings season, I like making a list like that of potential call and put spreads. So even though I have this one on a put spread list, even though it's in a nasty downtrend, why? Because it's a huge gap down on earnings. It could be a gap and snap candidate. So not only because it's gapping down, but on earnings, the volatility is going to be high. So 30-minute high, that's a put spread idea. The old Trump stock, whipping all over the place. They were talking about it today, that it's slowly getting up and running. 1639. This is a pro gap. One of you in Greg's coaching yesterday was asking about pro gap. Pro gap is it's igniting a new move. This was a trading range in a downtrend, and now it's gapping up over all this stuff. So that doesn't mean you buy it, because we need, you got to apply the other traits of Greg's gap course, the other 7 steps. And to me, this gap's too big and no price void, but it's still a pro gap. Mindy here, similar to CSGP. Yep, skins on my list. Yep, saw it yesterday on earnings. So this one is identical view to CSGP. It could be a gap and crap 30-minute high put spread. So I have it in a window. Yeah, skin's a pro gap. Well, I don't know. Do we, and sometimes I don't care about, it's close enough. So don't give me a break. Is it a pro gap? It's gapping to 1503. Yeah, it's gapping over. So that's a pro gap. Absolutely. Absolutely. That's a pro gap. So that's step 1. We got a price void. It's not excessive. So the final step for a gap trade this morning in my abbreviated analysis is put it in a 5-minute chart. Let's see what it does in the first 30 minutes. But this is a tier 1 gap setup. Okay. SPT, gapping up a little bit. We'll come back to you. Ring, nothing. Mealy up $100, 988. Wow, $100. Based on its shellacking here the last couple of days, it's still not a whole lot. CDNS up to 150. So that's a bullish gap, but excessive for me. Garbage, Maxer, $28. It's gapping in the middle of the range, so you're gone. See, I'm just trying to prune here just so we can focus on the best. This is gapping out of a consolidation. That could be a day trade long, not swing. It's just swimming upstream in a downtrend. A pen, I don't see any gap in your messy. Agilent, nothing. PSA, I can't see the gap. RRC, it's gapping just within yesterday's range. Wow, tick 1400. Texas Roadhouse, that's a bullish weekly. Well, see, now that I look at more data, there's not a good price void. But 30-minute high might go higher. CYRX. Okay, alarm went off, but that that looks like a false alarm. We're still short this, and it looks fantastic. So I'm going to set a new alarm at 34. Skin, yeah, skin's, that's a matter of personal choice, how aggressive you are. I don't like to chase, but I'll put skin on the bottom right here. Triple W, I was hoping would gap down because this is a bearish consolidation and a downtrend. LL, if it closes here, that's a bear 1, 2, 3 with a sell. Look at that weekly chart on Lumber Liquidator. If this closes like this, we'll short it tomorrow.